Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, March 5th, 2019. I am Frank Ochoa, aka PivotBoss. Thank you all for joining me yesterday, also for the monthly market outlook. That video has been posted to the website and Twitter feed, so if you wanted to watch the replay, you can head over to pivotboss.com and check that out. Right now, we'll take a look here at the ES. What you'll notice right now is that price pulled back in the previous session here and is now holding right around the midpoint of the previous day's range. It's still holding just above the previous month's close, and again, this is kind of what it would look like if price were going to head lower. If price were going to head lower, you'd see a rejection here at the previous high. You'd see it sitting right here on top of the previous month's close with a very narrow pivot range. If price starts to break down through 2750 here, that could open up quite a bit more selling pressure, at least on a near-term basis. While the overall uptrend remains intact, any failure, say, to hold that 2750 here could open up quite a bit of selling pressure back to the previous month's low price. That would be about 2675 or so, and it could even see a rotation as deep as 2600 to 2620. So again, we'll keep an eye on the ES here and this current trend. Overall, the trend remains intact. You can see every time it dips below the 8-period average, which is this golden line, it is bought right back up. That's how strong this trend has been. At the moment, we're seeing some of that again today. But again, any failure to get back above 2800 would be an early indication that we might start to head lower. And again, a break of 2700, whether it's a few days from now or whenever, that could be a pretty significant break if that were to occur. So again, continue to watch ES here in the zone. Here's a look at the NQ. You'll notice with the NQ we have a very similar pattern. The FOMC key level from last November is also right here at the previous month's high. That's 7168.25. Basically, there's the high from last month, and price again rejected that high and pulled back some. But it also bounced off the pivot range, bounced off of prices below the 8-period average and below the previous month's close, and closed the day right at the midpoint or so. So a pretty decent rejection on both ends of the range. Price again consolidating in today's range right above and below the previous session's midpoint, but also honoring and continuing to honor that 7168 key level. Again, this thing has been trending up very nicely. If there's any failure to hold 70.75, that could open up quite a bit more weakness. Again, this is the midpoint of the level at 7K. Even we could drop into 7K and still be a buy, but a failure to hold 7K will open up a return back towards 6,800. So again, that's the framework that we'll be using here early in March. Let's take a look now at crude oil. Here's crude inside day developing right now, inside day yesterday. So this is a double inside day with an upward bias and continues to show signs that it is headed higher. I mentioned the 54s yesterday, very, very important key zone, down to 54.55. So anywhere in this zone offers a great zone for bulls to defend for a shot at continuing this thing towards 60. If you look at the higher time frame chart with value and VWAP plotted over the last year, 60.5 is value, and it's continuing to climb toward that level. This would be your 50% expansion from the key range as well. And again, this is the top of the key range that would lead to a nice test. That's at 60 bucks, 60.85, I believe, 60.85, something like that. So again, 60 bucks could be in the future here if price can continue to keep 55's bid. Lastly, taking a look at gold futures, you'll see right here that gold has taken quite a tumble here lately. We had a pretty strong rejection up here, which suggested that we pulled back as deep as 1300. Watch 1300 for a rejection, which could send it back up. It didn't. Instead, it just kind of ate through that level, which means we are going to continue downward until we find an opposing rejection like this, right? But the other side, until we come over here and hit levels, say, below these lows, which is 1275s, and then fire off a rejection tail back up. That would give us, whenever we do see this, which is with a book into this one, that's when we will likely see some sort of aggressive pullback toward the midpoint of that range and that'll give us a great target to work toward down the road. So again, right now, still not finding that low just yet. Sitting right around VPOC at 1287.5. Again, we may need to take out these recent swing lows here between 1260 and 1270 in order to see a nice rotation back up. So again, near-term weakness here for GC as it finds a downside rejection, and then from there it could be a great snapback buying opportunity. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.